You're very welcome to the Irish Political Roundup with me, Roisin the Cleric.
And me, Paul Brophy. Tonight, Roisin, we're talking about an issue that has been around for the last 10 years or more, and is with elections coming up, both local, European, and general in the next couple of months as well. Housing is going to be one of the top issues, definitely, that's going to be on people's lips. So to discuss the issue of housing and where people see us going, we're delighted to be joined by two fantastic women. It's blessed art thou amongst women this evening. I'm delighted to be joined by Regina Mangan, who's been in business over 27 years and is the managing director of Liberty Blue, which is a estate agent based in Waterford. It is one of the biggest property management companies in Waterford, and it prides itself on providing a top class customer experience. Regina has won many awards locally and is also a judge of the young entrepreneurs in Waterford as well. So delighted to have you on this evening, Regina.
Thank you
And
so
our
much.
second guest is from Carlow, so they're not too far apart. We're delighted to be joined by Shirley Lidireith. I hope I pronounced that wrong. I hope I pronounced that correctly. Um, but Shirley has over 15 years experience in financial services and 4 years experience working in property service. And between her and her dad, Lidireith Finance, they have over 50 years experience in banking and financial services, and have helped many people from many walks of life help help them purchase their first home. Ladies, you're very welcome to the Irish Political Roundup.
Thank you so much.
Regina, I suppose you're in the business. Both of you are in the business of buying and selling houses. But Regina, from where you're seeing it right now, how is the housing market right now?
It really depends on whose side of the fence you're on. So for sellers, it's a very
Yeah.
strong market, very, very strong market, because we're seeing house prices rise significantly. So for example, in Q1 this year, according to the draft report, prices are up 5.8% compared to the same time last year. Then in terms of our own sales in Liberty Blue, I was looking at January to May inclusive, overall combined, our prices achieved were 9.8% over the asking. Okay.
Right.
Now, if you look at an increase in the asking price compared to last year, and then almost a 10% on top, that just shows you where the market's at. And the main drivers are the massive shortage of supply. We don't have enough second-hand homes in the market. We've got a relaxation in central bank lending, and so that is also stimulating the market. But supply levels are down almost 60% compared to pre-COVID times, 2019.
Wow.
60% less second-hand homes on the market compared to pre-COVID. So you have increased demand and an absolute drastic shrinkage of stock. So if you look then at who's buying and the other side of the fence, for buyers, it's very challenging, which I know Shirley will talk about that. And what we're seeing in the market overall, mainly 60% across the country of buyers are first-time buyers, according to the data. And our own in-house data, believe it or not, 70% of our buyers are first-time buyers. So very, very challenging, very, very challenging market for them. And then for people who want to move from their own house, whether they want to upsize or downsize or right size, it's very difficult for them, because they want to move, like our aging population wanting to migrate from more rural location to urban for facilities and go from an old farmhouse to a bungalow. There's no supply. So they're overhoused in terms of where they are, but they can't sell. It's in an egg because there's nowhere to buy. Now, that's probably one of the biggest problems we're seeing. And then the rental market is another topic which I can talk about.
Absolutely.
That's a disaster. That is really bad. That's just an absolute disaster, and government interference has made it drastically worse. It's a political issue. It's not a housing issue.
Yeah, absolutely. And Regina, just one more question before I bring Shirley in. You said nearly what 70% of your of those purchasing are first time buyers. Of that 70%, would the majority of them be availing of the government's first time buyers grant?
No, because all those homes were second-hand homes, and that grant is
All right.
available for new builds. So we're selling a housing development, beautiful development called Summerfields. They're an affordable home
Okay.
scheme, and people still qualify for the first-time buyers for the Help to Buy. But the data I'm giving you is separate to the new homes.
Okay. 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 And Shirley, you're also in the business of helping people to buy their home, be it a new home or a second hand home.
Yeah.
How are you seeing things at this moment in time? I know there's news this evening that there's been
Yes.
a cut in interest rates by the
ECB
ECB, so that's
have
going to help people.
Yeah, the ECB have dipped their toe in the market to start to reduce the rates, so they've reduced it by 0.25%. There is talks. The economists are predicting possibly another 2.25% by the end of the year. We won't hold our breath. How
Yeah.
that'll impact the market in general, I can't see a huge drop coming, because not all of the increases were actually passed on by all of the main lenders, so they weren't. So we've seen Bank of Ireland there recently announced a wealth of interest rates. They called it the Eco Saver. So they have interest rates for every BER rating there is, from A to none. It is
Okay.
from every interest rate point, be it first 1 year fixed, 2 year, all the way up along. It's quite mind-boggling, and it's quite daunting for anyone looking at it. But it is, if you know the BER rating of the home you're looking at, it's much easier to delve into that. But I was looking at the Banking and Payments Federation's data just before we came on today, and I was looking.
Okay.
Purchase mortgages are at, for Q1 of 2024, there was 6,899 purchase mortgages drawn down in the first quarter of 2024. That's down 10.9% on Q1 for 2023. So like there's not enough, as Regina said, there's not enough properties out there. And like we have a huge client base, and it's literally from your first time buyers to your, as Regina says, people looking to downsize, to right size,
Yeah.
as you put it, into a home that suits their lifestyle. There's so many people in their 30s that are not able to get on the property market, for the reason being, one, affordability, that their income doesn't meet the mortgage they're looking to buy due to house prices,
Yeah.
and two, that there's not the supply out there of properties that are needed. So there's not for like first time buyers buying new properties for Q1 fell by 7.7% compared to last year. So like, and that's brand new properties. Q1 for second-hand properties between last year and this year, I'm just reading my figures here, there was a much less of a drop. Last year, Q1, 3,617 first-time buyers bought second-hand properties. This year, 3,328. So there's not as much of a drop there. The schemes that are out there and on offer are great. If you qualify for them, they're there, and the government want to give you them. They very much want to give you them, but you have to qualify for them.
Yeah, that is the big thing. You know, you could be just barely outside the qualifying range and stuff like that, and
Very
that
much so.
it could be €100, but that €100 could make a huge difference.
And like when it comes to the Help to Buy is a fantastic scheme, but it's applicable to a first-time buyer buying or building a brand new home, and only brand new properties. But there's not enough of those being built. And as Regina said, there is a huge undersupply in the market.
And Regina, if I could come to you, you said in your intro, it's a political issue, not a housing issue.
Yes, indeed. It is a political issue, particularly around the rental. So the rental market affects the entire housing market. If you've got, I suppose, well, first of all, we have a transient society. We have people who arrive into Ireland, for example, to work in medical roles. So somebody who's coming into Ireland, let's say from India, They're not going to land at the airport and buy a house straight away. They need to rent a property. Or people on short-term contracts, they won't get a mortgage. Or you might have couples cohabiting who will need to rent before they commit to buy. And you have breakdown in marriages where a second home is needed and a rental property. So the government interference has really been to satisfy, I think, the general public, and they haven't listened to stakeholders. The worst thing they did was bring in the rent pressure zone, which I spoke about a number of years ago when it came out with Damien Tiernan on WLR, and like predicted that, first of all, there was an embargo on rent increases for 2 years, which meant then when somebody rented, they drove the price up massively to deal with the fact that they couldn't increase the rent for 2 years. There wasn't enough thought with these knee-jerk decisions. I can't recall, but it's a wild number of changes to rental legislation over a matter of a couple of years. It's colossal and double digits. And they really are to sort of satisfy the electorate. So, you know, I feel really passionate about this because we're seeing so many landlords leaving the market. They're racing out of the market. There's some very good property owners and then not so good, like any space. But in the main, the majority of people who own properties they own 1 and 2 properties, and they're typically mammy and daddy landlords. They are PAYE workers. They are not massive funds. I do think something needs to be in place to make it a win-win situation, a win for the landlord and a win for the tenant. And, you know, more consideration around that security of tenure. But we, in the last month, have issued the highest number of eviction notices that we have done in the last 3 years. And I know that our counterparts are experiencing the same. So stringent legislation, RTB slowness, ineffective practices, the rent pressure zone, other people then got caught when they were renting to lovely tenants. Like I had this lovely couple, an elderly couple. I've just sale agreed their house. They had it rented out to a lovely single lady, and she was paying €400 a month, right? So because the Dungarvan is now in the rent pressure zone and they didn't understand any of this, they said, will we rent it again or will we sell it? And I said, well, if you rent it again, you can only increase the rent by 2%. So like, that's just over 400 a month. That is not viable. You pay tax on that. So it's not a level playing field across all properties. Yes, there are some landlords taking advantage, but in the main, what we're saying is that the good small property owners are being forced out of the market, mainly, if I was to pick one thing, because of the rent pressure zone. Now we will have a worsening situation by Christmas, and because these notices will have come into effect, and we will just see the supply levels shrink, and shrink. And it is an emergency in my view.
Yeah.
And
of course that
sorry, I beg your pardon, Paul. It's purely to satisfy public sentiment because people are angry. And if people could see the system working, then they would be less angry. You know, they really, really would. But I can tell you now, if somebody, you know, was expanding, I mean, even from an economic point of view, how can we hire people if there is no accommodation for them? It is an extraordinarily serious situation. And how can we bring people to work in our hospitals if there is nowhere for them to live? And I do not exaggerate that.
No, I see a huge amount of clients coming through the door in a panic. We've gotten notice served. The landlord is selling the house. Can we afford to buy our house? And a lot of them are looking to purchase because it might not be something that they had planned on doing immediately, but it's something that their hand has been forced. We do see a huge amount of that too. So we do. And it's very unfair. And as you say, Regina, they're not thinking of the actual people on the ground.
And also now the new homeless is the middle income earners.
I'm sorry, Roisin, I didn't hear a word you said. I'm so sorry.
Right. The unfortunate thing is now, in 2024, the new homeless is the middle income earners.
Yeah, very much so. Yeah, incomes are not there unless you've got a very specified career. If you're on a career path that you've got a great income, yes, you will get your mortgage to meet the house you're looking to purchase. But a lot of ordinary Joe Soaps, like ourselves, are not always meeting the income bands that are needed to purchase. That's why some of these new schemes that have been launched, they're a fantastic idea. The Help to Buy, you're getting back your tax back for the last few years, which will help. But again, it has to be a brand new property. The First Home Scheme, it's an equity share scheme. It's fantastic in the sense that it will allow some couples to, or individuals to purchase their home. It bridges the gap. The government take an equity share in your home. It gets them while they're starting out in life that they can purchase their home. But again, there's not enough properties out there.
And the affordable housing now is actually unaffordable for many couples because it's over the 60,000 income earners price range.
Yeah, absolutely.
Yeah, exactly. Sorry.
Well, I suppose, look, there's so many factors. The cost of building is rising and rising. And, you know, biggest issue that developers have now is access to finance. And the incredible thing is that the government credit themselves for building 30,000 homes annually, as if they actually went out in the morning and built them themselves. Now, this to me is just, and I think if they say it often enough, people will start to believe it. Is this a great thing? Well, believe it or not, back in 2005 and 2006, we had the same planning legislation, and yet they were building an average of 50,000 properties a year. But that's because the developers had access to funding and stage payments, and the commercial banks were there. There's no longer commercial lending at an affordable rate. And that is playing a significant part to the whole problem.
Yeah.
And do you think, Regina, the government could step in through to have like a strategic investment fund or the Land Development Agency if they could provide finance at an affordable rate? Do you think that could be a positive step?
The government has certainly invested significantly into affordable housing and social housing. Now there needs to be a real drive in terms of delivering private homes. And what they're delivering is not enough to satisfy our growing population. That is the bottom line. We have a growing population and the numbers don't stack up. We are way behind. So it's amazing what the government were able to do when the pandemic happened, when, we had to react to the war in Ukraine. It's amazing what they can do. And I just believe that their benchmark is not high enough.
That's a good point. And Shirley, for anyone who's kind of starting out on the mortgage journey, there's a lot of paperwork involved, and it's a huge process, and it can be kind of a scary one. What kind of tips would you have for people that are kind of looking to get on the property ladder?
Okay, there's no hard and fast rules to how to do it, but I would always say speak to a broker. Your bank can give you fantastic advice, but they can only advise you on themselves. If you speak to a broker can advise you on all of the lenders that are out there and find the one that best fits your needs. While all lenders follow the central bank rules, they all have their own niche, they all have their own criteria that what works. But generally, the hard and fast would be have your accounts in order, have your accounts clean in the 6 to 9 months before you're looking to apply for mortgage. Be it your first mortgage, you're looking to switch your mortgage, and like that's very much a market that's out there too, people to switch their mortgage. Just because you take a mortgage out, as I say to every client, you're taking a mortgage out, it's the biggest purchase of your life, is to purchase your home. It's the biggest loan you'll ever take out in your life. Just because you're taking it out now for 20, 25, 30, up to a maximum of 35 years, doesn't mean you're stuck with it for that length of time. And it doesn't mean you're stuck with the lender you've started with for that particular time. You do shop the market. It's like your home insurance. You shop the market every year for your home insurance. Same with your car insurance. For your mortgage, at the end of every fixed term, you should be looking what's out there, what's best for me. When I said then keep your accounts clean, so no unpaid direct debits, no stress on your account. So like the day before payday, does your account still have something in it? It doesn't have to have massive money in it, but does it have something? You can go into your overdraft if you've got an approved overdraft, but don't go over your overdraft. You know, like the lenders will look at your accounts in the 6 to 9 months prior to you applying for a mortgage. They want to see that you can afford this. The bank don't want your home. They want you to take your mortgage, pay your mortgage, and they make a profit. That's how basically in very simple terms the banks work, and they don't want your home.
They're managing a risk.
Yeah, basically. So like just for very basic figures, if we say your mortgage payment that you're going to have is going to be €1,000 a month, you need to be showing them affordability of about 1,200 a month to allow for your mortgage, that you can afford your mortgage, your life insurance that has to go along with it, your mortgage protection, and your home insurance. And that you're comfortable, there's a little bit of wiggle room if the interest rates were to slightly increase. So they look at it that you're stressed repayment. So if the interest rates were to jump by, God forbid, 2%, which they have done over the last few years, that you can still afford your mortgage. But you're also meant to have a life. So your repayments, while Regina will agree with me here, rent payments are colossal in some parts of the country. And while some people are paying upwards to nearly 2,000 a month for rent, their income doesn't actually support that, and they're struggling to make those payments. When it comes to your mortgage, you're meant to have your mortgage, but you're meant to have your life, your nights out, your meals out, your holidays, your nice car, go get your hair done, your nails done, all of the coffee with friends, bring the kids to cinema, whatever it is. You're meant to have those things along with having your mortgage. So the lenders don't want to see that. Yes, you can save for your mortgage, but you're stressed then trying to fit everything else in. They want to make sure that it's comfortable for you, because it is a long process. You're going to have your mortgage for a long, long time. Unless we all win the lotto.
Yeah, absolutely.
I would also then say, make sure your credit is good. So if you've had previous debt, so if you've had a loan, and like prior to, in the last couple of years, it was just the ICB, the Irish Credit Bureau, that the lenders checked. And that was just any financial institution you took a borrowing with. Now they have what they call the CCR, the Central Credit Register, and anything over €500, be it if you're buying a phone on finance or car insurance on finance, and you renege on those payments, that gets registered on your credit report. So it's to be very wary of that. If you think you might have been late with a payment or you might have missed a payment at some point, I would always say to clients, run your CCR. It's free. It takes a couple of days. You fill it in online, you submit information online, and they'll send you your report. That's what the banks will see. I would always say, then there's no surprises, that you're not going, no, everything's great, you send it in. And I have had it happen to clients, and I've broken someone's heart last week to turn around and go, you will have to come back in a couple of years. There was a blip you didn't know about, and it broke my heart, because that's not a conversation anyone wants to have, whereby if we knew in advance, and it was something that they had forgotten about. They didn't remember that they'd had a loan that they forgot to pay back. The loan is cleared. It wasn't a huge loan, but it has impacted now that they're going to have to wait another 2 to 3 years before they can sit down and look to purchase their home, unfortunately. When it comes to, I'm sorry, now I'm waffling. When it comes to how banks look at you, for a first-time buyer, the central bank changed the rules last year, and they announced that you could borrow 4 times your income as a maximum, as standard. It used to be 3.5 times. They looked at it and kind of went, actually, that's a little bit tight. We'll give you 4. But you have to be able to show that you've got your affordability. So when it comes to the banks, any of the banks looking at your affordability, they look at it as a basic 3-prong. Do you have an existing mortgage that you're paying? How much are you paying? Are you renting? How much is your rent? And are you saving? what are you saving every month? And when I say saving, I mean what goes in and doesn't come back out. So I would always say to a client, have a separate account for your mortgage. You're saving for your mortgage, be it in a credit union account, a mortgage saver account, whatever the case may be. You put in there what you can afford to save without having to touch it. Then have a separate one for your buffer account for like your holidays or the car service and stuff like that. Put that separate. If at the end of the month before payday, you have a little bit left, you can pop it into your mortgage saver account, absolutely. But you need to have what's your basics, that it's not touched. I've had clients where it's like, oh no, I save like 500 every week. Okay, you save 500 every week, but once a month you pull back out 500. So you're not saving 500 every week. It's what goes in and doesn't get touched. But it has to be what goes in and what can you afford that you can. So if you're putting in 500 a week, but having to pull back out 500 once a month, that's not attainable for you. That's not comfortable for you, and it's not going to serve you long term. So thereby you need to pull back your expectations. Make sense?
Yeah, it sure does. And there's a lot of talk about affordable housing, and how do you define affordable now?
Now that's the thing. You can't, in one sense, what's affordable for one person is not affordable for another. You know, when a lender is looking at anybody, they're looking at you. If you're a single applicant, they're looking at you, just you alone. If it's a couple, be it partnership, be it husband and wife, be it partners, be it brothers and sisters, be it friends, you're looked at as a unit and you're assessed as a unit. So one person might do all the saving, and they only look at then, that's a combined, what they save combined. It's not that you're looked at separately. When it comes to what's affordable, it depends on what part of the country you're in, what kind of income you're on. You know, there's so many things that come into it when it comes to affordable. You know, what's affordable for me might not be affordable for the next person, but could be more than affordable for somebody else. You know, it's very much a minefield.
I might jump in on that if that's okay.
Please.
Because we're selling a development that is classified as affordable, so I can talk about that. But I would like to just say, jump on something that Shirley said there, which I think you gave fantastic advice, Shirley, for buyers getting a mortgage. As an estate agent, for any buyer watching this, it is absolutely makes no sense to go to a bank for a mortgage. It is nonsensical, because what people don't realize is that the broker does the shopping for you and gets the best rates. And I know that I have learned in recent times, as Shirley said, that the banks have different, I suppose, quirks, I'll call it, right? So some banks have certain criteria. They may all seem to have the same criteria, but they don't. And they don't all give the same interest. They don't all charge the same interest. And people don't realize how much extra it can cost you to go directly to one bank. And some brokers charge a small fee to provide this service, but it's actually minuscule compared to what a buyer can save by getting a really good broker and someone who will get them the best deal over 20 to 30 years. I've never met Shirley before, so I have no bias here, only that it is absolutely the only way to go in my view. So that's, I'd like to say that. In relation to affordable, so we're selling a development for our client, White Box Properties Developers, and the development is called Summerfields. It's based in Kilbarry and Waterford. We're currently selling 62 homes. We had 92 homes to market last year, and it's part of the government affordable scheme. The Waterford City and County Council take an equity stake in the property. The equity stake is anything from 5% to 20%, and it can be up to 75,000 per house. So if you can imagine, like I've known people who bought a brand new home, which we'll call the retail price is 299,000, and they've ended up buying the house in the region of 200,000. That is with the equity stake and then their help to buy. And it's the equity stake that makes it affordable. And that doesn't mean that it's shared ownership. It's a private scheme. It's not social. It's a private scheme, but it bridges the gap between the amount that they can get for their mortgage and the purchase price. And then, of course, your help to buy if they qualify, plus their mortgage, and then bridging the gap to the purchase price of the property. They don't have to pay back that equity stake, but they can buy it back if they wish after 5 years. Now, if they're reselling the house, they have to pay it back, selling the house on. But it's an amazing scheme, and not everybody, as Shirley rightly said, can qualify, but a lot of people are qualifying who wouldn't have been able to get on the property ladder. And if you can imagine, because it's a new home scheme, they qualify for the first home grant, which it's unfortunate that first-time buyers don't qualify for first-time home for a first home grant if it's a second-hand home. I don't think that makes any sense, really, because the average price in Waterford now for a 3-bed semi, for a home, a 3-bed semi, is 247,000 in Waterford City, but you'd be hard stretched to get a house for that price, you know? So
Carlow is similar, and we have Setu, and Setu is increasing, and we have MSD here, and MSD is huge. So the demand for housing in Carlow is phenomenal, and huge amount of landlords, as we've said, have sold. So like student accommodation in Carlow is non-existent. There's a huge amount having to commute, no matter where they're coming from. But we have a couple of affordable schemes. There's one here, Kushdara has some of the development was affordable. And it is a fantastic, I have seen clients that, normally they wouldn't have gotten onto the property market, but because of, and around the country, I deal with clients all over the country. We're not location sensitive, so we're not. So I've got clients all over, but like the affordable housing schemes are fantastic. You know, as you say, it's an equity share, but you don't have to pay it back. So if you decide for the whole lifetime that you're staying in this home, you don't have to pay back the equity share. And when your estate is sold, it's paid back at the end. Or, as you say, if you decide to rent out the property, I know you have to pay back. But a lot of the equity share schemes, you know, if you decide that you're moving somewhere else, but you keep retaining that property, you do have to repay it and that. But it's an amazing scheme to get people onto the property market, so it is.
for sure.
And there's also these cost rental schemes. I saw there's a cost rental scheme within Kilkenny, and you know the rent was something like over €1,200 a month. Like to most people, €1,200 a month rent is not cost rental rent.
No.
Yeah. I suppose we don't have enough supply in that respect in Waterford for me to comment, because it's not making an impact. Now, the good thing about the affordable homes is that a lot of people are renting, and they move out of the rental properties into the affordable home schemes like in Kilbarry, and that's going to free up some stock if the property owner decides to stay in the market. I think the only people now that are entering the market in terms of buying rental properties, investments, are people buying through their pension. And that's really where it's at. It doesn't make sense otherwise, because if you buy property out of your own funds, you're paying too much tax, and then there's so much legislation involved and a huge anti-landlord sentiment out there, which is being accelerated by a lot of the government actions.
And Regina, would the you know the way there's different tax treatment for like your small landlord who'd have maybe 1 or 2 properties, and then you have your large kind of your large vulture funds, or sorry, your investment funds and stuff like that. Do you think the tax treatment there's too much of a skew there? If the small landlord got even some of the tax benefits that the institutional landlord will be getting, that would probably keep more of them in the market, I'd imagine.
You're absolutely right. Sorry, I misunderstood what you first said. Yeah, the issue is that by the time, I mean, some people don't realize that when your rental income is treated exactly the same way as income tax, as if it was a top up to your salary. So, for example, if somebody's on 40,000 a year and they get 15,000 rent, then you could actually look at it that they're on 55,000 salary, so they could move up in the tax bracket. So they're penalized for that extra income. And then, like the government then last budget, knowing how bad the rental market was and the massive exodus of small property owners, gave some kind of a 300 to 400 credit for property owners for appliances. To me, it was a joke. A joke, really. In fact, it was an insult. That it'd been better to put the money into something meaningful, because it meant nothing. And it should have gone somewhere that might have actually impacted lives. It was ticking a box to, oh, look, and whatever way they packaged it, it was deceptive, at first. But when I looked at it, I said, this is really just a joke, really.
Yeah, it is a challenge without a shadow of a doubt. And Shirley, for our viewers out there who are said they are trying to get on the mortgage the mortgage ladder, are the Help to Buy and all these other schemes, they are helping people, they're assisting people.
Yeah, they are. I have majority of first time buyers that are coming through ourselves. Majority of them are buying new properties or building a property. We're here in Carlow Town. As I said, I deal with everybody all over the place, but we do see a lot of self-builds. So a gifted site from, be it an aunt and uncle, a grandparent, a parent, whatever the case may be, or they've purchased site. They've been lucky enough to be able to purchase one of the few sites that are out there. Help to Buy applies there. And like the Help to Buy was enhanced there in July 22, whereby it was increased that you could get up to 30,000 or 10% of the value of the home. So if it's a self-build, it's the 30,000 of the value on completion, but the value on completion cannot exceed 500,000. If it does, you don't qualify.
Wow.
Yeah. So, and I've had that happen whereby, yeah, we estimated it'd be worth 400,000. It comes in at the end and it's actually worth more, which is great in one sense, but not in another, whereby they don't. And like with lenders, there's a couple of lenders that do the self-builds, and as we were saying earlier, the cost to build has become increasingly huge. So you'll have an awful lot of, we'll say, tradesmen that are building their own homes. I've had clients that build their own house on the weekend. They work all week and they build their own home at the weekend, bit by bit. So they do, to cut down on labour costs. But like one of the lenders, the cost per square metre is 1,900 per square metre is what they want you to allow to build your home. Now that's the actual cost to rebuild. So it is the figures they're using, but that's what they dictate it should be. So it is that. I was actually speaking to an engineer earlier on today, and he turned around and he said, I said it and I'll keep saying it. He said, that's too high. He said, you can build a house for less. But that's what some of the lenders are working off of, 1,900 per square metre to build your home.
Wow.
Which is, yeah, that's a lot of money.
That's a lot, because years
It is a lot of money.
I built my own house. It was, we had a lot, after building the house, we had a lot of equity. We built it for half nothing compared to what it was valued at. And after buying the site as well.
Then I'd see a discrepancy, like the house will come in, that client's buying brand new house. The house, they're buying it for 325,000, but the reinstatement value could be 400,000. Because they have to allow for the demolition if, God forbid, something happened to the house and the house had to be knocked and rebuilt. And and like clients are kind of going, that's a huge amount, but that includes my contents. And I'm like, no, that's the building. That's if you take the house, shake it upside down, anything that falls out is your contents, the rest is your building. Yeah. So, and that's the easiest way to look at it with that. But yeah, it's like the Help to Buy is fantastic. It's effectively free money in the one sense, as in the government are giving you back what you paid them in tax over the last year, but you have to meet the criteria. If you don't meet the criteria, you don't qualify. And you have to live in the property. If it's a couple, one person has to live in the property for a minimum of 2 years. Yeah, so there's
And do you
lots
think
of...
sorry for interrupting there. Do you think it's a little bit unfair? It just applies to new builds or self builds, that second-hand homes are excluded?
Yes and no. I'm being very diplomatic in my yes and no. Yes, in the sense that it's reducing the amount of properties that first-time buyers can have access to. In that sense, they can, if they want to use the Help to Buy, they have to buy brand new, and brand new homes are quite expensive. But the way it's being looked at is that the Help to Buy scheme is encouraging employment, because the construction sector, are all working hard. It's better for the environment. We're building more energy efficient homes. Sometimes I wonder, are they too energy efficient? As in this, they're like too airtight. So I do. The house doesn't breathe. But yeah, I feel it's unfair in certain ways. But then would it drive, and I don't know, Regina, you might be able to comment on this, would it drive, if first-time buyers were able to use the Help to Buy scheme to buy second-hand property, would it drive the price of second-hand properties up, do you think?
I think it's a risk, and look, it's definitely a risk and a consideration, because people have access to more money. What's driving, the main driver though of prices, is it all goes back to the simple economics, supply and demand.
Yep.
And it is a supply and demand issue. It's a bit like, I remember staying in a really nice hotel for a conference and opening up the minibar and getting a packet of crisps. And the hotel wasn't in the town, it was a few miles out. And I couldn't believe the price of the bag of crisps. I was like, for God's sake, how can they charge this for this price of the crisps? Well, I had the convenience of paying for the crisps and eating them there and then, or getting in the car or getting a taxi and driving downtown to get them. So there was my simple example of supply and demand. But in terms of, if we go back to 2005 and 2006, they were building 50,000 houses per annum. And the government are now applauding themselves for getting up in the morning and themselves building 30,000 homes a year. And the government aren't building them, the developers are building them. And they're not building enough. And that's why we have a housing crisis. We're not building enough. The cost of building is too high. Why is it too high? What is happening that we can't build homes quicker? I live in a passive house, which was built very, very quick. But there's just not enough innovation, in my view.
There's a deficit of 256,000 homes. I actually looked that up earlier, so I did. There's that much of a deficit of homes. So we're never I don't know that we'll ever meet the demand, or there'll have to be something drastic done to meet demand. Like, we have an aging population, so people are around a lot longer. So parents are holding on to their homes for a lot longer, and children don't want to live with parents all their life.
Yeah, absolutely.
And the other thing that we haven't discussed is, because of the inability to get on the market, like Shirley spoke about, all of the mortgage approvals of people with mortgages that haven't been able to access those mortgages because there isn't a supply. So we're seeing so many young people moving to Australia, emigrating. Like, that is a disaster. I don't know what the stats on that are, but it's I don't know, every second 20-something-year-old is leaving the country, and housing plays a significant part in that.
Yes, very much so.
My daughter is one of those young women leaving for Australia in August. She's a doctor. She's heading over to Melbourne.
Yeah.
No, it's not fair. Like, our youth are leaving, and they're not going to come back too quick with the cost of everything, Yes.
Roisin, we can't hear you.
Roisin, I can't hear you either. Oh, sorry.
The problem with your mic there. Yeah, we can hear you now. Yeah.
Okay, so I start again.
Yeah.
My daughter is heading off to Australia. She had in August, she's a doctor. She can't even afford to rent a house on her own, never mind buy a house on her own. And she's working 80 hours a week.
Wow, that's a
Crazy.
disgrace.
Yeah.
Her second degree, you know, and
Crazy.
it's ridiculous.
It is. It's wrong.
And it is. All our good, educated young children are leaving Ireland. And so we don't have then, you talk about you don't have the staff for having to, import employees and work in the hospitals, but all our medical staff are leaving Ireland, and then we're having to put out a for sale sign, please come and work in Ireland. You know,
Yeah.
we don't have,
Yeah.
as you said, Regina,
It's madness.
accommodation.
If I could summarize what my views on it, because we've discussed the problems, this is a political program and we are coming up with elections. Really, government need to step up the building. We need, and when I say they don't build, again, I go back to it, they need to enable the developers and builders to build. And the key blocker for builders, developers is access to finance, affordable finance, okay? That is a key issue. They need to escalate the building from 30,000, at least 50,000 plus. I mean, if over 5 years, then that would reduce the deficit of homes that are needed. So, and then take some meaningful action to encourage people to stop exiting the rental market, small property owners, and to entice people into it. We need a functioning rental market in order to sustain our economy. It is absolutely imperative. And let's not forget that a roof over our head is one of our 3 primary needs.
Okay.
And we must have a roof. Everyone deserves one.
Absolutely.
100%.
And,
Well,
we're just coming up to the day tomorrow is the voting day for the local elections. But after next week, politicians will be getting ready for the general election, which we're anticipating October, November time. At least November time. So we're going to be really, really honing in on the housing crisis because it has been coming up on the doors for the locals candidates and the European. It's what they're getting. So now it is really time to really, really put the TDs and the candidates, pull them to task and make them stand up, speak up for the people of Ireland and for the homes. We need a home, as you said, Regina. And we need to be affordable, Shirley, and that's what we're going to start doing now from maybe not from next week on, but the following week. We'll have a rest after this. But definitely housing will be at the top of the our political agenda in calling politicians to account.
Yeah.
Absolutely. Well, Regina and Shirley, thanks a million for taking the time to talk to us here on the Irish Political Roundup. Roisin and I, really appreciate you coming on, and you've gave us some really fascinating insights, and this will certainly have a big impact as regards driving the agenda of housing on this channel going forward. So from myself, I'd like to say thank you very much.
Before you go, Regina, can we give you a book a plug?
That's very kind of you. Thank you. Thank you so much, Roisin. I've written a book. It's called How to Build a Smarter, Faster, Better Estate Agency Business. But in actual fact, this book is for anybody remotely interested in business. I've gotten some great reviews, but the best one is for my mother, who's 84. She said it's a very easy read. And I share a lot of my ups and downs over 20 years in business. It's raw and real. So you can buy it, order it from the book centre in Waterford online, or if you go to the Liberty Blue website, you can click and order it, or you can buy it on Kindle.
Buy it.
I look forward to reading it.
Yes. And thank you so much indeed, Regina and Shirley. Thank you.
Thank you so much.
Bye.
Bye.
Bye-bye.
No.
On.